Now for our main story of the day, and that's the Blockware outline prediction of a $400,000 Bitcoin price along with the math to back it up. Now, this is pretty awesome. And again, shout out to everyone today in our live chat. I appreciate everyone's support. Shout out to Blockware Solutions as they shared on X how Bitcoin can reach $400,000 per coin during the next halving epoch. Brought to you by Blockware Intelligence. Here we go. 2024 halving analysis, understanding the market cycles and opportunities created by the halving. Unlike other commodities, Bitcoin has a predetermined algorithmic supply schedule which cannot be changed. There are multiple factors contributing to the cyclical nature of Bitcoin's price, including network adoption and the macroeconomic environment, but the most impactful is the mining subsidy halving. Yeah, that's right. Bitcoin's market cycles are unique due to its fully transparent blockchain, providing market participants with more granular information than any other asset class. And moreover, the predictable supply schedule further impacts the psychology of market participants. An example, demand. So number one, halvings reduce the sell pressure. Miners are the primary force of sell pressure on the price of Bitcoin. They receive all of the newly issued Bitcoin, and a majority of which they must sell in order to fund operating expenses for their mining operations. The weakest miners on the network are eliminated, and sell pressure is significantly reduced. The price of Bitcoin begins drifting up, and a new wave of adoption then begins. And assuming a 35,000 price action after the halving, the US dollar value of Bitcoin mined per year can drop from $11.5 billion to $5.7 billion. That is 164,250 Bitcoin less mined every year, more than MicroStrategy's entire Bitcoin treasury. Now, after the inefficient miners capitulate, the profit margin increases for surviving miners, which further reduces the sell pressure. So based on the post-capitulation hash rate estimate, this would result in a $2.3 billion reduction in annual sell pressure from the miners. Now, number two, halving brings new demand. With supply being diminished, demand is the only remaining variable determining the market price of BTC. Many market participants understand the supply side dynamics at play due to the halvings. Historically, this has led to a surge in demand in the months following each halving, as evidenced by on-chain data. We'll be checking out these charts in a little bit. And due to the positive sentiment, market participants prepare to deploy capital at the first sign of upward momentum. Now, decreased supply plus increased demand equals strong positive signal for the price appreciation. Number three, the halvings cannot be priced in. Despite their predictable nature, halvings cannot be fully priced in before they occur. A higher price today would result in more miners coming online, introducing additional sell pressure and limiting the price appreciation. And moreover, the weakest miners, those with old generation machines and or high operating costs, are the first to unplug post-halving. The elimination of these miners significantly reduces the sell pressure, as they were selling most of their Bitcoin to fund their operations. Lastly, there are some market participants that believe halvings are bad for the security of the Bitcoin network, as the diminishing block subsidy reduces the amount of miners, making Bitcoin more vulnerable to an attack. And when halvings successfully occur, these doubters are proved wrong and positive sentiment increases. Now, number four, Bitcoin cycle volatility and historical performance. Bitcoin's extreme volatility is a side effect of its halving shocks and rapid global adoption, resulting in four distinct stages within each halving cycle. Stage one, the halving. Stage two, the bull market. Stage three, the bear market. And then stage four, recovery. And while Bitcoin is often criticized for its extreme volatility, on a long enough time horizon, its volatility is solely to the upside. Keep that in mind. Now, nobody who has ever bought Bitcoin and held it for more than 5 years is down on their purchase. That's worth repeating. Nobody who has ever bought Bitcoin and held it for more than 5 years is down on their purchase. So where my long-term hodlers at? Holla in the live chat. And for each epoch, the price of Bitcoin has increased by the following amounts from the halving to the next bull market top. From 2009 to 2011, we had a 584x increase in price action. From 2012 to 2015, 92x. From 2016 to 2019, 30x, and from 2020 to 2024, 7.7x. And now number five, diminishing returns may not be the case going forward. Some question the bullishness of these halvings as the stock of existing Bitcoin grows relative to the amount of new Bitcoins being mined. This is a common perspective, but it may be incorrect. Less than 10% of the existing Bitcoin have moved in the last month. A large majority of Bitcoin is held by users unwilling to sell at today's price. Now, the small amount of Bitcoins that is moving and being traded is what determines today's price. there is a baseline of demand, and from Bitcoiners saving for the future. The reduction in sell pressure becomes more pronounced each halving after Bitcoin more than doubles in price. This indicates that halving-induced reductions in sell pressure could become more extreme and potentially lead to larger bull runs in the future. Now, 2024 will be the first halving where the supply of Bitcoin available for trade decreased since the previous halving. And during spring of 2020, the percentage of the outstanding Bitcoin available for trade was at an all-time high, indicating the Bitcoin was becoming more abundant. However, this trend had reversed over the last 3.5 years. And as the new bull market begins, there will be less Bitcoin available than the previous cycles, the first halving this has ever occurred. And assuming the price of $35,000 at the date of the halving, a $400,000 cycle top would break the trend of diminishing returns, which is a reasonable expectation due to the 2 billion halving supply shock and increasing scarcity of liquid BTC supply on the exchanges. Now, number 6, juxtaposition with gold. Gold is an asset similar to Bitcoin in that they are both non-sovereign stores of value. However, when juxtaposed, Bitcoin poses far more desirable attributes. Facts. Number 1, Bitcoin is absolutely scarce while gold is only relatively scarce. That's true because with gold, you can continue mining a new supply, adding to the overall, supply each and every year. With Bitcoin, there can never be more than 21 million Bitcoin. And number 2, Bitcoin is more portable, divisible, fungible, and is less vulnerable to rehypothecation by centralized custodians. Facts. So after the 2024 halving, the inflation rate of Bitcoin will fall under 1%, which is less than half that of gold. Now, $400,000 per Bitcoin would put the market cap of Bitcoin just beneath the parity with gold. Let's go. Can't wait for a 12 trillion market cap for the King crypto personally. Now, given the bullish catalyst induced by the halving, we believe this is a fair estimate for the top of the coming Bitcoin cycle.